Alina Trigub, welcome to the show. I'm so excited to talk to you. I'm very passionate about women in real estate, and particularly foreign women. My wife is from Mexico, and she's here, learning the language and then learning the real estate language. You have a very inspiring story, so I'm very excited to bring you on. You have a background in multifamily, you have an MBA, you've done across multiple asset classes, storage units, mobile homes, and you have this wealth of knowledge. We just saw you speak at the Raising Money Summit. You're a meetup host, and you have your hands in so many amazing things. Welcome to the show.
Thank you, Ruben. It's a pleasure to be here. I'm really excited to talk to you and to share some of that knowledge with the audience.
Thank you. So tell us a little bit about your background. I don't want to steal all your thunder, but how was it? How long have you lived in the United States? And tell me about the process of coming up, going through traditional United States education, and then becoming a multifamily syndicator, and then spreading out into multiple asset classes, including mobile homes and storage units.
Sure. My journey in the United States started 26 years ago when I immigrated here with my mom. I went to school for my undergrad. I went to Baruch and got a degree in accounting. I worked as a tax accountant for a few years in public and private, but I never liked accounting, so I decided to switch to something else. And I switched to the software development industry, where I've done a lot of different things, but mainly those things evolved around being a liaison between business and technology. And while working in software development, I realized that regardless what industry, what field you're working on, it's all about being surrounded by the right people and knowing how to work with people, how to bring value to people. And given that thought and the books that I've started reading, I was able to establish and develop a pretty strong relationship with a lot of folks that have been successful in the business industry. And over the time while working as a former tax accountant, I realized that the taxes that my husband and I were paying were pretty high, and I was always looking for ways to minimize these taxes. And real estate has been on my mind for many years, but I haven't taken action for a very long time. So finally, about 6 years ago or so, I decided to take action and started researching real estate. And while researching real estate, I was hoping to find something locally in New York, New Jersey area where I live, but I couldn't find any investments where the numbers would make sense. Given that I'm a former tax accountant, very conservative in nature, the numbers just never made sense in general. And I decided to step out of the comfort zone and look for something out of state. And that research led me to syndication. When I finally made up my mind and decided to invest in syndication as an equity partner, I invested in one, and then it sort of became a trickle-down effect. I almost immediately invested in another, and so forth. And after investing in a whole bunch of them, investing with regular cash and then self-directed accounts, I realized the potential of it, and I realized that there should be a demand for this type of product in the general population market, because most people are familiar with the stock market, but very few people know about these private placements. And I decided to start my own company with the sole purpose of helping other people diversify their portfolio. So in addition to having something in Wall Street, just stocks, bonds, and ETFs, they could have diversified portfolio, and they could have some of the real estate in that as well. And I started my own company almost 2 years ago, and have been working ever since on helping other people become passive investors and invest not only in multifamily, but also now into other asset classes such as mobile home parks and storages. And I have been researching other asset classes and always try to look at one specific asset class at a time and do research and see if we can add another new asset class to our portfolio. So ever since then, helping others build their wealth passively, save on taxes, and help improving the communities have been my goal. And I've been working on this goal ever since, and planning to continue working
Yeah,
on
I
this.
really like your focus on helping other people. I think a lot of times when people get into real estate, they're so focused on what can I get out of it? How can I make money so that I can support my family? But over time, sometimes as you start to grow, you realize that the best way to grow is by helping other people
Absolutely.
and giving them an opportunity and sharing what you do. So your first few syndications, they did they require a very large investment? Because I think a lot of people are interested in the multifamily space, but it's just the barrier of entry is massive, right? Because not everybody has $100,000 sitting in a 401k or in a business.
For
Um,
sure.
but there's definitely plenty of people with lots of tax problems. You
Yep.
being one of them in the past that are looking for a way to relieve their tax burdens. So, how did you get into your first few deals, and what was the education process about learning? Did you go to a boot camp? Did you just meet somebody that was in syndication? How did you find out about it, and how did you do
All of the above. I went to a few conferences. I think the first one was through our mentor, which is Dave Lindahl company, out in Boston, and I met a number of people there, and then started learning more outside of the conference by just reading books and reading books. Number one on the asset itself, on multifamily apartment complexes, and also reading books about the legalities of the process of its on its own, the syndication process, and then again talking to people, talking to passive and active investors on both sides to get the perspective from both sides to see what are the pros and cons of getting involved in it, and what is the way to filter through the tons and tons of different syndicators, markets, and the offerings to really decide and make a decision as to which investment to decide on. And quite honestly, the first deal or two were very, very difficult to invest in. It's like, you have that barrier, and I think this is internal barrier for a lot of folks. You have that internal barrier inside of you, and it takes a while to jump over that barrier, to overcome it, and really decide, yes, I'm going to invest, because like you said, it's a significant sum of money, regardless whether it's 25 or even 50 or 100,000. It's a lot of money to put um, and give faith to someone that you've never met before, or only heard or talked to on the phone virtually, and don't know much about them. So what I did when I was starting out, I had like a phone conversation with them. Then I asked for references. I checked their references. Then I also checked their profile online. I checked their social media accounts. And then one of the sponsors actually made a small mistake, which I used to my advantage. He, instead of BCCing people, I guess MailChimps went around at the time, I don't know. He did reply all, and I got by chance a list of all of his investors or potential investors. So I reached out to every single person on that list, and about 20 to 30% of people responded. All I wanted to know if they ever worked with this person and how was their experience. So the people that have responded gave me very positive experience, and it gave me that warm and fuzzy feeling, and that made me make a decision and invest with them. So in a way, um, his mistake helped him get me as an investor, and it helped me to overcome that initial barrier of investing with someone virtually. But yeah, I never regretted it. I was really happy I started doing it, and my only regret has been ever since is that I have not started doing this much earlier in life.
Yeah, it seems like you are very careful about who you work with. Like you even asked me before coming on the show a lot of questions like, "Hey, come on, I need to find out more about, what is it that you do and how are you associated to your company?" and why aren't you sharing the story of your deal? And I had to explain to you, hey, I'm kind of coming to you for advice about raising money, not necessarily to pitch you something.
Sure.
But you had a lot of questions for me, so I like that about you. I think that
Yeah.
that shows in just the way that you interact with me that you have a level of diligence and carefulness about what you do with your investors' money, and that you protect it very carefully, not only for them, but for yourself and who you associate with. And I'm sure you do the same kind of thing with your real estate before you select it. You must analyze it a lot about it.
Absolutely. And Ruben, all of that comes with experience. And, it doesn't necessarily have to be an accounting or audit experience as the one that I had in the past. But even people that have other corporate careers over the time, as they go through their project, whether it's meetings or work on something specific, a certain level of responsibility uh, becomes attainable, and it makes them realize that they are responsible for certain things, and it helps people um, take those skills and kind of transfer them into their new career or new venture or whatever you want to call real estate, and make sure that they are staying true to their word, staying responsible, staying true to their course. It's all attainable, but it's all attainable through years and years of experience in other fields that they have been before.
Yeah, so the multifamily syndication, and I'm sure it's the same way with commercial real estate or um, the storage units or mobile homes. There's a lot of moving parts to the team, right? So you have the main person with the vision and the relationships. There's a person that's in charge of dealing with the investors and making sure that they get all the appropriate information after they've invested. There's
Yeah.
someone that does the construction. There's someone that does the underwriting or property acquisition. There's somebody that helps with the capital raising. Sometimes it's just one or two people or three people that have all of these different jobs. In my company, there's about 9 people. And my specific focus is, the capital raising side, the social media side, the creating relationships, the going and learning, and bringing new tools for the expansion of our group. But in your business, what is your role? What are the things that you do within your company?
Sure. So the main role is being the investor liaison and really concentrating on helping new investors get acclimated with the syndication process, and staying in touch, staying connected with existing investors to make sure that if their interests or long-term goals are changed or ever evolve in which they should be, that I'm capturing that information and I know what to send them next. If they have any particular newly acquired interest, then I capture the information about their new interest. So when I have a new offering that matches that interest, that I definitely send it to them, and they have a chance to take a look at decide to whether to join us or not. In addition to being the investor liaison, it's also been connected to the industry, working with the operators. Number one, working with the existing operators that I already have working relationship with. But in addition to that, learning about new operators, and not necessarily brand new to the industry, but just new to me, people that I haven't met before, someone who is either up and coming or someone who has been around the block for many years and potentially looking for an opportunity to collaborate on one project or the other, or maybe multiple projects. I'm always open to collaboration. I don't reject anything. I look and consider every single opportunity to see what makes sense. I obviously don't jump into every single one. I probably take on about up to 10% of what I see. But in general, I'm open to speaking with everyone to review what they have to offer and to review what they're looking for and see if there are synergies. I tell people it doesn't even have to be pure multifamily syndication. It could be something completely different. But if it's an opportunity, I would like to take a chance and see what it is. And maybe if it's not for my investors and myself, maybe I can connect them with someone else that I know that would potentially benefit from talking and discussing and deciding to partner up in the future. That's just the way I personally conduct business.
So originally, multifamily was the asset class, and we can all relate to it, right? Because
Of
we all
course,
need a place to live. We all can understand apartments. We all know somebody that lives in an apartment. But over time, you started getting comfortable with that asset class and started opening yourself to the mobile homes and to the storage units.
right,
So I'd like to hear about that and also find out if you think down the road you may expand more, like into oil
absolutely.
and gas or gold or movies or anything else, or do you
Yep,
think
sure.
you'll stick with just real estate?
Sure. It's definitely going to be beyond real estate down the road. And yeah, when it comes to apartment complexes, it's easy to relate. I mean, I've lived in one for many years in Brooklyn, and the very first project that I jumped on myself as a passive investor was also a very similar apartment complex, not the way that it looks, but similar in the sense that in a very similar area in another part of the country. But the apartment complex where workforce housing people live, all of us need a roof on our heads. And when it comes to renting a place, for people that are blue collar or even some of white collar workers, the most important thing is safety and convenience. So the apartment complex was conveniently located to the highways, easy transportation, the infrastructure were there, colleges were in the area, there was enough employment to cover people in the area, and it looked like a great opportunity, and that's why I decided to jump on it. But over time, after doing multiple investments in multifamily, um, and speaking with a number of my investors, I realized the need for further diversification. So not only across multiple markets, but also across multiple asset classes. And after doing additional research, I picked one, I believe it was mobile home parks. And then gradually I did additional research and picked storage as another asset class. And right now, these are the three asset classes that we offer to our investors. They seem to be doing well. Mobile home parks and storages are also considered some of the more recession resistant asset classes, if you will. And it's obviously not for everyone, but a lot of our investors like these asset classes, and they choose to invest in them to stay in course with true diversification. And I personally also invested in residential assisted living, and that's another asset class that I'm personally interested in and have been looking at for a while. I'm still haven't fully decided whether it's the asset class I'm going to offer to my investors, but on the horizon, potentially that's the one. If not assisted living, that the next one most likely that I'll be personally researching will be student housing. So
Yeah,
that's
at the event, I met a lot of people that were in hotels. I'm going to Chicago to it's called the Information Management Network on Wednesday, where this group of people, they discuss all these topics about all kinds of commercial real estate. So it can be hotels, multifamily, and even like cannabis farms. So there's all these different commercial assets that I'm starting to just kind of open my eyes to that they're
sure.
available. I didn't
Yeah.
realize that there would be so many people that were invested in hotels at the event. I met at least probably about 10 people. Do you think hotels is something that you would
Yeah,
be?
there were quite a few. Potentially, definitely not this year or next year, but down the road, I may look at the hotels. I have a few friends that are investing in the hotels and say that it's a lucrative field. But for me, without doing any research, without doing any analysis, I can't really say whether I would be interested or not. But I will definitely put some time into researching it down the road. It's for me, it's just not the hotels is not the immediate priority.
Yeah, so let me ask you about the research because I had one person who I'm pretty sure did not do any research. He he publicly said that storage units, when when the recession comes, the first thing that they're going to do is, if they don't have money, is stop paying for their storage units. So he's like, that's probably not a good asset class. But I'm pretty sure he said it without a lot of background. What is your data about that you have that shows?
Sure. So my research shows that unfortunately during the recession, what most commonly happened is people that are living in either large houses or larger luxury apartment units decide that because they're losing their jobs or because company are downsizing and they need to find or get a lower paying job, they need to move into a smaller place to live, but they don't necessarily want to give away all of the personal household items that they've accumulated over time. So these folks tend to rent a storage unit with a thought that this is going to be completely temporarily. They'll rent it out maybe for a couple of years until things settle down and the economy goes back up, and then they can go back to larger place to live again and take all that stuff out of the storage and live happily ever after. It doesn't always work out that way. Typically what happens is these people either leave the stuff in the storages for a very long term, for many years, and they do pay because again they're responsible individuals. They know that they need to continue paying because otherwise it may impact their credit if it goes to collection, or if God forbid they're in a financial crisis where both have lost their jobs or they cannot afford paying anymore, then their stuff gets locked up and it gets auctioned. So the storage, as a storage owner, we are in a win-win situation either way, because when we sell their stuff, we collect some of the funds this way, or if they keep their belongings in the storage for a very long time, then again we're winning from keeping them as our tenants. And these are the best tenants because they don't complain to you in the middle of the night. There are no toilets to flush, no plumbing, so the expenses are very, very minimal. And from that perspective, storage is a great asset class because by keeping our expenses lower, we're able to keep the income at a high level and benefit from it that way.
And when it comes to mobile homes, I heard Dan Hanford say the other day that he did a survey on his investors, and he asked them why they did not invest in his deals. And you would think that the typical answer would be that the return was not high enough. But what he found was that the typical answer for why I didn't invest in your deal was because the people could not imagine themselves living in the apartment complex that they were going to invest in. That was the number one reason. So in mobile homes, I don't know if you agree or disagree with that, but who are the people that typically invest in the mobile homes? Is it people seeking a higher return, or what is the attraction to investing in mobile homes?
The way I see the trend, it's typically the people, or at least a significant portion of them, maybe at least 40% people that have originally decided to invest in multifamily, but because a majority of the markets have been overheated and it's been hard to find the multifamily, they decided to switch to mobile home parks with the assumption that it might be easier to find an investment within this asset class. And partially it included me because once we got to the point where we had enough multifamily investments, or I didn't see any apartment complexes that would offer the returns as high as my investors were looking for, I decided to diversify, to look someplace else, something that was relatively compatible, but by the same token offered some diversification, which essentially is a way to add the cushion to your portfolio by diversifying across multiple asset classes or multiple markets, or just across multiple things, as you said. And it did work out to our favor. Our investors like the diversification. And when I added the third asset class, that helped us go even further. And I received a lot of positive feedback from my audience saying that they were all for diversification and wanted to see more offerings within the asset classes outside of multifamily. So it really depends on the appetite and interest of your audience. Maybe there are some people that only want to stick to apartment complexes, but maybe there are other people that want to see other things, like you said, gold, oil, stocks, maybe even food industry, or hotels, whatever it is. Some folks want a full diversification across various things.
Yeah. So how big do you want to grow your business? So do you have any big goals, or tell me more about where you see yourself in 10 years?
In 10 years, I see my business to be fully established, and I see a portion of it being dedicated to educational component where I can educate other folks how to become financially independent by, number one, getting rid of their debt, because a lot of people, especially young people that are going through college, coming out of college with a big debt, and they don't know how to pay it off. So I want to teach young people how to pay off their debt, clean up their act, have a clean income statement, and start saving early on, and then work on becoming financially independent. And when I say financially independent, I don't mean that you need to leave your job or stop working or not do anything at all. But I mean, get to a point where you are able to fully support yourself and have emergency funds set aside and ready to start investing and live comfortably without thinking where I'm going to find the money tomorrow to buy food or to pay for housing and so forth. A lot of people are not in that position, and I want to help as many folks as possible to get to that level. Because unfortunately, what I'm finding through my kids that are in schools and through colleges, well, when I was in college, that unfortunately our educational system does not prepare kids um, to know how to be financially independent or what to do even after they graduate college. They really don't know anything other than they need to get a job, what else to do, how to get on that road to become financially independent. So that's where my passion is. That's what I want to do.
Very cool. Now, let me ask you if you can give some advice to the passive investor, somebody that's looking at doing a passive deal. There's so many, like you said earlier, so many syndication groups that you can go to, and they're on all sides of the country. They're in
Yep.
Florida and even in California and in expensive areas in New York. Obviously, people are moving their money out of there because it's so competitive, and there's bigger opportunities in other places. But if somebody told you, Alina, I want to invest and I have an extra $100,000, it's not my last $100,000, but I don't want to be an active investor. Who of all these people, where should I go, or what should I at least look for in making a decision of how to invest my money passively?
Sure. So what I would tell such person is, first and foremost, they need to educate themselves. They need to understand how the commercial real estate works, and number two, they need to understand how syndications work. And I would also tell them that these investments are not FDIC insured, and hence that there are risks involved. So before they make any decision, I want them to be fully educated on how to read the offering memorandum and what to look at and how to look at different terms. So until they get that grasp of what the offering memorandum presents and what they're getting themselves into, I wouldn't want them to even consider investing. I think that's essential, that every investor understands the and has certain expectation from the portfolio and understands that these risks are real. Anything can happen. And when they're going into the investment, they're going into it with the money that are specifically allocated for investing. And there is a chance of losing this money. And these are not their last X many thousand that, God forbid, these money are lost. It's not going to put them in a negative spot. They still can continue with their life. They can continue to move on. But this is not something that's going to change their life upside down. Obviously, everyone is doing their best to make sure that's not the case. None of the money are lost. In fact, the opposite happens, that we make the returns and we meet the expectation, or in some cases exceed the expectations. But I just want to make sure that everyone knows that it's not safe investment, it's not protected, but the risks that are involved in real estate syndications are calculated risks, and they're calculated based on the actual financial statement. So essentially what happens is you take the financial statements and you do the projections based on what the local market dictates. That's why this is a fully calculated risks, and if they're comfortable with that calculated risks, then they should totally do it and invest.
What about the fix and flipper, the guy that's been flipping houses in the backyard, in the same area that they live for 15 years, and do you think that they should continue to do so, or maybe kind of get into a different asset class like multifamily? Or
it really depends on one's passion, bandwidth, and future plans. I mean, flipping is good for people that are independent contractors that work for themselves and don't have W-2, because it offers ordinary income that's taxed at your tax rate. So, and if someone wants to be active and be constantly engaged, then they can be doing flipping. But what I hear from a lot of flippers, especially people that are older and maybe closer to the retirement age than others, they're getting too tired. They don't want to be constantly on the road. They don't want to be constantly dealing with contractors, and it's a business that's too engaged. It's never going to be passive. So they tend to start shying away from this active real estate business, and they tend to start looking for something that's slightly less aggressive, and whether it's syndication or buying a property and putting a property management company in charge of managing this property. It's totally their decision, but a lot in that case depends on whether the person is willing to give up control, because a lot of people need to be in full control of their investments. And for those folks, I always say that syndication is not for you, because as a limited partner, you will have no control whatsoever. So that's another point to keep in mind.
what is the trend that you're seeing around multifamily syndicators? Is it something that is pretty stable in regards to the amount of people that are entering the arena? Do you think that more people are educating themselves and that there's going to be too many multifamily syndicators in 5 years? Or do you think that right now it's probably there's not enough room for more people? What do you see? What are the trends?
What I see is that just like everyone else, I think that correction is coming, and I am afraid that that correction will impact people that should not be in the business. And while I don't wish anything like that to anyone, I know that this is going to happen one way or the other, and the only ones that are going to survive, the ones that are truly dedicated to the business and truly people that know 100% what they're doing and have very reliable partners that will support one another no matter what.
What about the people who are the ones? I've heard a couple of people say that the more sophisticated syndicator will not uh, leverage the highest amount on the property or keep the highest loan to value on those. Those I
Absolutely.
think are the people that are going to survive really. But do you see like a certain type of investor? Is it more the mom and pop, or the person that owns 100 multifamily units that have had it in their family for many years? Who are the ones that are most likely to leverage as high as possible on their deals?
People that don't have enough education, that don't fully understand what they're doing, they don't really understand how leverage works, and doing it more or less haphazardly and surviving just because we are in a thriving market right now. But as you said, as soon as that correction comes, people that are over leveraging are going to go down and under the first ones, and that this is definitely happening.
Yeah, there's some people on the sidelines waiting for this correction to happen so they can come in and
Sure.
buy the apartment complexes that are over leveraged. There's people seriously standing waiting for this to happen.
Yeah,
I don't necessarily believe that a big recession is coming, but I think there is going to be some correction. Obviously,
absolutely, absolutely, and I'm completely with you, Ruben. And yeah, as and one of those people that's sitting on sidelines is Sam Zell. I don't remember the amount of capital he has waiting to be deployed, but he's definitely one of those folks that have been sitting on the sidelines for quite a while now, and he openly talks about that without disclosing how much capital he is ready to be deployed.
very cool. So, who is your favorite person that you like to help? Who do you target somebody? Do you like helping women? Do you like helping anybody that wants to grow financially? Somebody that has tax problems? Is it a little bit of everything?
I mean, in general, I'm happy to help everyone. I'm not going to stereotype and say no to someone who is not a woman, for example. But in general, typically, majority of my investors are either very busy business owners that have been operating their business 24/7 and literally have no bandwidth to look into investing but want to have a diversified portfolio, or people that have corporate careers, pretty successful careers, and they simply don't want to spend the time on becoming the landlord, but they do want to have investments in real estate. So that they also come to me, and most of them are accredited, of course, and I'm more than happy to help them on.
What about for me, Lena? Do you have any advice for me? My situation is my group has 250 units. We're looking to expand. We are good at underwriting, but we haven't really mastered yet the art of public solicitation type offerings. You mentioned to me earlier that you're you come from a place of let's build a relationship and over time then we invest, right?
Yep.
But are you familiar at all with the solicitation type of campaigns, the 506Cs? Do you stay away from those?
Did you say 506 C?
Yeah, the 506.
Yeah, I mean, I worked on some offerings that were 506C, where general solicitation is allowed. So, Ruben, the most important thing to understand, even if it's general solicitation, it doesn't mean that you or I can go today on social media or announce on the radio, hey, we have this great offering with 22% IRR or 10% cash on cash or whatever it is. Come and join us. People from the street are not going to join us regardless whether they're accredited or not, simply because they don't know. So, and maybe someone will or will not do as extensive research as I or you are doing, but they will do some research, check us out to decide who is this person, why are they offering this, who are they offering it to, and how did they even find me. So, in other words, real estate is a relationship business. It takes time and effort to build those relationships, and only after those relationships are built, people will come to you and bring their friends and bring their family. So even if it's a general solicitation, I strongly encourage others to go and make that solicitation with the audience that has some sort of experience with you, regardless what you've done in the past, even within your professional circles, so maybe your educational circles, so places where you went to college, your alma mater. I would find the people that you know from your past, that know your track record from the other life outside of real estate, and start talking to them, because they know more about you than anyone else in the world, and they are the ones that will believe in you because they worked or dealt with you in the past. And even though it's a different field, like I said, each field has a set of transferable skills that can be transferred from one place to another. So if they put trust with you in one area, they'll be able to put trust with you in another area because they know you as a person. And that's, I think that applies to real estate or any other business in general. Does that
Yeah,
make sense?
it absolutely does. Those are great words. So, if somebody wanted to get a hold of you, Lena, what is the best way for them to do so?
Sure. They can either do it through my website, samofinancial.com, or find me on Bigger Pockets, Facebook, LinkedIn, or Instagram. I think that gives them enough places to reach out to me.
Yeah, after I took a selfie with you and saw you on stage, I was like, I had to connect with you in all of them. I was like, where is he on
Sure.
Facebook? I looked you up on Instagram everywhere. That was
Thank
great. What about this last question before we sign off? What was your favorite takeaway from the event that we went to with Adam Adams, the Raising Money Summit?
Oh my God, I was so happy to be there. I learned about so many other new great strategies from other speakers. There was an amazing lineup of people on stage and off stage, and I made so many new connections. And for me personally, it's not a matter of exchanging business cards. I like to put a name with a face, and for me, it's a matter of having an extensive, intelligent conversation with the person and really getting to know the person that's holding that business card that's going to be passed to me any minute, because I want to establish long-term relationship, regardless whether we're going to collaborate or not. We may become best friends or just know each other, as opposed to just flipping cards and collecting as many as possible. It's not how I do business personally.
Yeah, that's what I really like about the events. I'm trying to go to a bunch and then make these deeper level connections. And that's one of the
Sure.
reasons, or one of the benefits, honestly, that I get on the show and I talk to people and I get to look into their eyes for 30, 40 minutes. And I
Yeah.
know that in a year or two, they're still going to remember me, you know?
Of course,
That's the best
absolutely.
part.
You
That's
got
my
it.
favorite part. Well, I want to say thank you so much, Alina, for coming on to the show. It's been a pleasure to have you, and hopefully we'll touch base at one of these events in the future and stay in
Ruben, it's a
contact.
pleasure. It's a pleasure. Thank you so much for inviting me to be on your show. I'm really thrilled to be here.
Thank you. All right, I look forward to following you on the different social media platforms. And with that, we'll sign off. Thanks again.
Thank you.